Hi, it's John Kelly. In this module, we are going to do an overview of sections 100, 300, 400, and 500 of the Code of Professional Conduct. And as always, we want to be efficient and effective, follow professional standards, and document what we have done properly. Now, this is an overview of the Canadian Code, but the rules are very similar worldwide. And this is what constitute the code's 5 sections. Section 100 on professional governance, Section 200 on public protection, and particularly 204 on independence. There's a lot of rules in there. Section 300, treatment of professional colleagues, Section 400, how to run your public accounting practice, and Section 500 on firms. Now, Section 100, 101.1, follow the code and the rules. Section 101.2, if you breach the rules, and perhaps you've only breached them in a minor way and in a way that can be fixed, if you've done it accidentally, fix the breach as soon as possible. And if it's not that significant of a breach, you've solved the problem. If it's a big breach, you maybe have to consider reporting yourself to the regulator to say, hey, we breached the rules. Do you want to do anything about it? Section 102.1, report yourself if convicted of illegal activity, and there's a long list of bad things you can do, and you're required to report yourself for any of these matters. Report if you're disciplined by another CPA body, and report if you're sanctioned by a regulatory body. (103) I think should be obvious. A lot of this I think is obvious. If you think about it, if you're trying to act like a professional, it should be obvious. Don't sign or associate yourself with anything false or misleading, of course. And cooperate with any investigation promptly. This is the old don't lie to the FBI thing that so many people have got into trouble for. If you're in trouble with the rules of professional conduct, perhaps it's not that significant and perhaps there will be a solution. But if you don't cooperate, you're just going to be in that much more trouble. And if you cooperate, perhaps the thing will go away with nothing much done or said. But if you decide to cause a big trouble and not cooperate, perhaps there will be penalties far greater than there otherwise would have been. So don't do that. And that's hard to do. I understand that, but don't do that. And just for greater certainty, don't hinder the investigation. No threats or intimidation. Section 300, dealing with fellow members of the profession. There is no 301. 302 is about communicating with a predecessor accountant. So if someone has come to you and said, hey, I'd like you to be my accountant, you have to talk to the predecessor. And you must do it. And you must inquire whether there are any circumstances that might influence your decision. Now, this is for your own protection. And I suppose if you live in a small town, you probably think you know everyone and know everything about everyone, but just maybe you don't. So the process of communicating, just to make sure that there's nothing going on that perhaps might influence your decision, even if you think you know everyone involved, is just a good idea for your own protection. And of course, if you live in a great big town, perhaps you know absolutely nothing about this prospective client, and perhaps you should do a bit of investigation. And the first place to start is with the predecessor. So this is for your own protection. Don't try to shortcut this rule. Now, if you are the predecessor, reply promptly. And it's just professional to do so. There is a rule that says you have to do that. But if you ever hope to get the client back, be really professional now. And I had a client that left, got the letter, said, well, sad to see you go. responded promptly to all the requests, and 9 months later they came back. If I'd acted like a jerk, not replied to the letter, not provided the information they wanted, and been just a real unprofessional jerk, they never ever would have come back. Now, I'm not implying that every client who leaves you, if you're really nice, will come back. Probably not. But if you absolutely want to guarantee that they will never come back, be a jerk now. So there's no point in delaying, and particularly there's no point in wasting your own time. I find accountants, you lose a client, it's the end of the earth, and it's not. So client, move on, it's their right. They can do it if they want. So respond right away that there are no circumstances if there are no circumstances. Provide whatever information is required. Don't put any more time into it. Now, I do find it impolite if you just get the letter out of the blue. Some other firm of accountants writes you a letter and saying, hey, we're the new accountants for so-and-so. Please send us the following information. I find that a little rude, and I also, like, to release client information, I need the client permission. So at very least, I'm going to have to phone up the client and say, are you really moving on? Are these guys really your accountants? So if you're the successor, make sure that the client first lets the other accountant know, the old accountant know. And if there are records that are needed, I think it's best and most polite if the client asks for the records. So if they haven't done it, you can help them. Dear former accountant, thank you very much for all the help in the past. I've decided to move on to so-and-so. I'm very foolish. I've lost a copy of last year's tax return and the adjusting journal entries you sent me. Would you please very kindly send those to me? And I think it's also nicest if the client asks for their records back. That's just the politest. So if you're the successor accountant, make sure that happens, because I can understand the predecessor perhaps getting annoyed. And you must advise the successor if you were unable to continue or resigned. And then the successor is to evaluate whether or not they can continue with the engagement if there are circumstances. Now, this is normally simple and easy. Just the client, for whatever reasons, decided to move on. You know about it. There's nothing going on. They just decided to move on. Write the letter back, no circumstances, provide whatever records, and you're done. Now, if it's not simple, if something significant is going on that you need to advise the successor about, perhaps you don't want to try to do this yourself, and perhaps you want to see a lawyer to make sure that you're very careful with how you do that. But 99 times out of 100, it's just no circumstances and drive on. 303, you are required to cooperate and promptly provide reasonable information. Of course, the client's interests come first, not yours. And on instruction, transfer client records. The client owns their records, and you're not allowed to sit on them. And particularly, don't damage your own reputation by being annoying at this place. It's amazing how quickly that gets around. Even in a big town, it gets around. If you're the successor, and I've had it, please provide me with copies of the last 10 years tax returns, the last 15 years journal entries, the last this, that, the last that, the last the other. And you go, come on, I'm not doing that. I'll give you last year's tax return, I'll give you last year's journal entries, but the rest is too much work. And remember, the client has access to their records, not your audit file. So if the client doesn't have a copy of the bank rec, because only you do, you got to cough up a copy of the bank rec. I've had, though, other accountants say, please send me a copy of the audit program for cash. I'm going, no, I'm not doing that. The audit program's mine, not giving you that. So I'll give you a copy of the bank rec, but not the audit program. So if you are the successor, be careful not to ask for too much or for inappropriate stuff. 304, care with joint engagements. You're doing something with another accountant. Be professional. 305, if you're doing special work, let the incumbent know about it. 306, do not impair the relationship with the incumbent. And if there's referred work, you don't do additional work without agreement of the referring firm, and that is not to be unreasonably withheld. 400, this is stuff that's only going to happen once or twice in your career, so if this stuff does come up, be aware that there are rules about this, and if you're, for instance, 401 and 402 about the name of the practice, it is to be a professional name. So I'm not going to go through what the rules are, but read those rules before deciding on a name. And you don't want to pick something unprofessional, and that's what the rules describe. If you decide to associate with another firm, there are rules, read them. If you have an office that's not a full-time office, there has to be a member accessible to the client. No part-time offices without approval. And association with others and practice in corporate form. Bit more complicated to read the rules, but you're only going to need to do that once or twice in your career, so I'm not going through the details of that. 500, have firm standards, and of course you have to. The rules say you have to, not just the code of conduct. 502 is details of what the firm standards have to encompass. And do not associate with others unless they also follow the rules. Should be obvious stuff. So that's been an overview, and you need to read and understand and follow the rules. And I guess my attitude to a lot of this is most of this, once you think about it a bit, should be really obvious, that this just is describing how to behave and act like a professional, and you really don't want to do the opposite. Trying to find ways around the rules is deadly. And I've had colleagues phone me and say, okay, the rules tell me that I'm not allowed to do valuations for my audit clients. How do I get around that? And that's just the most silly and most deadly thing to do. If the rules say you're not allowed to do it, you're not allowed to do it, and don't try to figure out a way around it. Just follow the rules. And most of this, as I say, should be obvious. And most of it, you just should, go through your day without even getting close to bumping into any of these rules. And if you're always deciding that the client interest is the most important thing, that your interests are secondary to the client interest. So my client said, my colleague said to me, basically, I can make a whole bunch more money if I do business valuations for my audit clients. So I'd like to put my interests ahead of the public interest and make a lot more money. That's a great idea. Let me do that. And I'm going, you can't. And eventually, to their chagrin, they found out in a big way that they couldn't. So, thanks for listening.